Welcome to another episode of Equity Mates. It's great to be back for another week of long-form interview. My name is Bryce, and as always, I'm joined by my now a lot closer equity buddy, Ren. How's it going?
I'm very good, Bryce. A bit cramped.
Yes.
It's been a few months since we've had to share a couch.
Yes.
Yeah, it's. But you know what it does mean?
We're back.
It means we've got a guest back in person.
Yeah, it'd be weird if we didn't. Sitting here.
For the first time in probably, what,
5 months, yeah.
Hopefully we haven't lost our touch.
Hopefully. We're going to be spending the next week speaking with an expert, long form, digging into markets and all things entrepreneurship. We've got Watchlist Wednesday, plenty to cover this week. So it is our absolute pleasure to welcome to Equity Mates for the first time, Conrad Song. Conrad, welcome.
Hi, thanks for having me.
So Conrad is the managing director and founder of Macro Investment Group. So let's start with that, Conrad.
Yep.
For those that haven't come across Macro before, what is it? And
sorry about that.
that's okay. What is it, and what do you do?
So it's great. I've had to explain this like so many times. It's a good thing, I guess. We started off very traditionally in just finance. So that was everything research on the ASX equity markets, and then we did advisory or like wealth management, right? So that grew, which is a very standard business, especially in Australia, right? It's like you go to, if you've got any capital and you need help, it's kind of where you go, right? Subscription services online or via email. And then we kind of realized that, we're in the perfect space for I guess this digitization that's expected to happen. So this was like back in 2016. So we started all of that, and then we said, okay, we want to sort of cater to the retail market that we knew was coming, right? So, not to say we had a crystal ball or anything, but it was pretty clear that, it was written in stars, the sort of generational wealth transition that was about to happen. And now we're seeing that, and a bunch of fintechs have really taken advantage of that, including ours. And so we've, partnered up with some really good companies for tech. We've built our own tech, and we're coming out with an app, and that's really sort of our main sort of go-to market strategy at the moment. But before we sort of hit the real sort of fintech space, like in a big way, we just spent a lot of time building infrastructure. So we have a fund, for example, that's launching on the 1st of January. So things like that. So fairly traditional, but moving into that real fintech space now.
Yeah, nice.
A key thing that you do at Macro is aim to eliminate barriers to entry. And, in finance, especially for retail investors, there have been so many barriers to entry that we're really seeing technology erode in the last few years. What are some of the key barriers that you're working to eliminate over at Macro?
I think firstly, just taking that first step. Like even when I first started, and this is like years ago, I was like 18, and I was like, what is this? It's like Investopedia. It's just like a bunch of information. And so there's obviously that informational barrier, and then you actually have just like the basic stuff. And there's a few companies like Superhero and Stake that have really made some leeway on that, open up a trading account like that with very little brokerage, if any. But I think for us, it's offering a holistic sort of value add proposition for clients where it's not just cheap brokerage and it's not just, a bit of information. It's everything in one. So, there's a lot of barriers to entry. I think the biggest one, to be honest, though, is that people still don't know what the hell is happening, and people are losing a lot of money. So that's kind of what we're trying to help clients not do.
Yeah, well, we started Equity Mates because, for so long we still do feel that the industry tries to make it as confusing as possible. So no one, that makes people feel like they don't want to do the DIY approach. But
yeah. Like a conspiracy. It's almost like there's people out there just trying to make it complicated, It's like, it's not that complicated.
Yeah.
So you mentioned the rise of the retail investor, and it's obviously in full swing at the moment. Tomorrow we'll chat about, the brokers becoming cheaper and that sort of stuff. But what do you think a lot of beginners or intermediates get wrong about the markets when they first start out?
Good question. So, I get asked a lot about, so I started the company in 2016, but I've been in finance since 2019. Since I was 19, which is like 10 years, right? So I'm still relatively young, but I've been it for a while, and hasn't stopped. Where people will, first thing, right? My friends, family, people I don't know, or just meet. It's like, what stocks do you know about? And I'm just like finding this very repetitive, where it's like, I mean, there's a lot of value to understanding a good opportunity and having a good stock tip, but it's like there's like 99% of the work is in the execution of the trade, the management of the portfolio. And so I'd say, look, I think they're getting just their perception on investing is quite skewed, especially with a disproportionate amount of value put towards just the name of the company. Something that we speak about a lot internally is that, heck, you could have picked the same stock as the guy next to you. One guy's making a profit, one guy's making a loss. And then you add other variables to the equation, like the allocation sizing and pricing and all that kind of stuff. So I think it's just this very naive attitude that people have towards the market. And I know we're speaking about this later in regards to like cryptocurrencies, but that's like cryptocurrencies is a very great or it's a funny. It's confirming that sort of problem. It's like, just pick the best crypto, right? Get Dogecoin and you're up 200% in like 3 days. And then, you try to adapt that to the mentality of equities investing, and it doesn't work. One, because your risk appetite is completely different. You're not, unless you are going for that big winner and then there's pre-IPO and IPO markets you can take advantage of. But I would say it's just a general lack of, sort of mature understanding of investing that people need.
Yeah. I think that's such a good point around, portfolio management, I guess.
Yeah.
Not something that's very sexy, not something that people talk about a lot, but critical. And that leads on quite nicely to what you mentioned before, which is that you're actually moving into funds management. You'll be managing your own portfolio, the global macro long short managed fund.
Yeah.
Let's get a definition out of the way for people who are unsure. Long short, what does it mean?
Yeah. So I mean, there's different categories of funds for people who don't are not used to this, but basically the long short gives the fund the ability to short as well. So it's not long only. So that's like the counterpart. And shorting offers many different strategy, options, but the main thing I think is the hedging capabilities that it offers. Not to get too complicated into it, but the idea is, let's say you've got an exposure in a specific sector, and you'd like to remove some of that risk in the short term. You can take a short position on an ETF or an index, let's say, that is correlated to that. So it's just a lot more, and this is the other thing, right? And this goes to like the conspiracies that we were just talking about. It's like, it's not that complicated, but there are a lot of institutional tools that exist that don't, that are just not available to retail investors. And it's actually, so, the fund is great, and thanks for letting me plug that in. So January 1st, I'm not going to be managing the funds myself. We've got much smarter and brighter and more experienced people than I doing that. But one of the things that I am very closely working on at the moment is the mobile app. And it's like, all of these complicated strategies that institutions use, what we're trying to offer is a way that retail investors can actually do it. And portfolio management, as you mentioned, it's a massive one. Like when we were at uni, like I'm not sure if you guys study finance at uni.
Neither of us studied
finance.
No, okay.
So it's like the first thing that you learn in finance, one of the first things, is how to optimize a portfolio. And you learn very early on in your degree that optimizing a portfolio has nothing to do with the actual name of the stock or the industry that it's in. It's all numbers, right? And so, for example, when you diversify something, it's like, you think, oh, well, if I have stock in tech and stock in mining, it's like fairly diversified. It's like, well, sure, by theory, like, yes, but practically speaking, what's the correlation between those two names? Because you can have companies in completely different industries that are correlated with each other. So, and the whole idea of a diversification is, removing that correlation. So, and spreading that out and limiting the volatility and maximizing your returns. And so you learn that straight away. And fund managers have these tools built into their portfolio management software, which costs thousands of dollars, because I've spoken to the guys that build these things. And then retail investors don't even know it's a thing, right? Because they're so focused on picking what stock. And so what we're actually looking to build is, we're building, and what we're looking to launch is a mobile app, which is going to allow strong portfolio management strategies for retail investors. So that's another plug-in.
Nice.
But yeah, anyways.
And I guess the question when it comes to the fund, like what's the edge that you guys are going to be bringing over any other macro long short?
Our guys are smarter. No,
Fair call.
No, well, I think so. Well, firstly, to give credit to the people that are going to be the portfolio manager of this fund. One of them is a prominent prop trader. So he's been in the prop trading industry for decades. Actually, he was the chairman of Genesis Prop Trading, and he started his own prop trading firm. They merged together. He's been I don't know if you guys know the documentary The Bulls and the Bears.
Heard of.
Okay, so there's this famous trader called Rambo, and this specific individual was his broker for a short period of time, was taking his course. Anyways, he's been in the industry back when documentaries were on VHS, right? Nice. And so he's been the head of trading for us. He's been absolutely killing it with our research that we offer to our clients. And then we've got another gentleman who's been sort of our head of research since we began, and the track record that he's had with the research with our just direct equity clients has been phenomenal. So we really do have some powerful guys at the helm of this thing. I guess the edge is, compared to what our clients generally get access to anyway, it's that global exposure, but understanding what sort of global exposure to invest in. And then on top of that long short edge is the hedging strategies and things like that. But, I guess at the end of the day, like any fund, it's really important for us to have consistent returns. Anyone can get 100% return in 6 months, but it's risk adjusted. It's how volatile was it? What's the consistency? So we'll see.
You say anyone can get 100% in 6 months.
Well, you can if you take a significant amount of risk. The possibility is there for anyone. Sure, but that's the problem. At most, or a lot of the time, it doesn't result in that. So we'll see, I guess, over the course of the rollout. Hopefully in the first 6 to 12 months, we have, consistent returns in a pretty difficult market. So, yeah.
And to close out, I've got to ask, if it's for retail investors, one of our key sort of rules here at Equity Mates is we hate fees.
Yeah.
What's the fees on the fund?
We're keeping it low. So it is a retail fund, not just wholesale. So it's open for both retail and wholesale. So there'll be a PDS and everything. And we're looking to charge 1 plus the MER. So 1%, 1.25%. And then we'll have the performance fee of 20% on top. So, but the fees are, so that was I to be honest, I thought the product was going to be worth that much, and our guys are that good, and I wanted to charge a little bit more. But after internal discussions and conversations like this, where people are like, hey, fees are getting cheaper, right? So we've decided to pull it down to 1%.
Yeah, I mean, sounds good.
Yeah.
Well, unfortunately, that is all we have time for today, Conrad, but we're excited that we have you for another 3. So
cool.
We will leave it there, and we will be back tomorrow chatting with Conrad about the race to the bottom when it comes to the disruption that brokers are causing here in Australia and around the world. So we'll see you then.